If you're looking to generate income from your investments, then dividend ETFs could be worth looking into. But with so many different options, how do you know which is the best to pick? In this video, I'll show you the most expensive mistakes investors make with dividend ETFs, explain the key stuff so you know what to look for when comparing them, and go through some of the best options available right now. When people talk about dividend ETFs, they usually mean funds that are specifically designed to prioritize dividends. But really, any distributing ETF could be called a dividend ETF, as they do provide a dividend. So it's important to know the difference between a fund that just happens to pay dividends and a fund specifically designed with dividends as the main focus. Now, before we get into the best options available right now, it's crucial that we establish the reason why we want to invest into a dividend ETF. As interest rates across the world continue to come down, dividend ETFs will continue to get more popular as people hunt for that income. And some of the rates that you see will be very appealing. That's why it's important that we establish exactly why we want to invest into these funds. It should be because we want that income, not because we feel like it's a superior investment overall compared to everything else. With dividend ETFs, some of the highest paying funds could actually lose you money in the long run. Let me show you what I'm talking about. Using the ETF screener on the website justetf.com, we can filter by dividend focus investments. We can then sort by the dividend yield for the last year. And from here, you can see some really appealing rates. If you look at the top one here, 10.2%. But it's also important we look at the growth of these funds as well. And bear in mind here, I've got the 1 year, 3 year, and 5 year. That includes the dividend reinvested. So you could go into that top fund there, the Global X Super Dividend Fund, get that nice yield of 10% per year. Actually, when you look at the performance over the last 3 years, it's less than 9%. If we compare that to the most popular ETF out there, tracking the S&P 500, over 3 years, you're looking around 50% growth. So if you're looking to simply grow your portfolio, then you could be leaving profits on the table by going after a dividend fund, rather than going for a bit more of a standard fund like the S&P 500. Even if you did have an ETF that tracks something like the S&P 500, you could still extract some income from it, but it would involve you selling part of your portfolio, which might not always be the most convenient. It could have different tax implications. So one of the main reasons that you would go for a dividend ETF, because you want that regular and automated income that doesn't involve you selling any part of your investment. And actually any growth you could see as a little bit of a bonus. So I just want you to bear that in mind when you're looking for these dividend ETFs, because it's not all about that dividend yield. It's very much a balancing act between the quality of the companies that the ETF tracks, the overall growth, and of course the dividend yield. So here are my top 4 favorite dividend ETFs right now. The first is the Vanguard FTSE All World High Dividend Yield UCITS ETF with the ticker symbol VHYL, and it has a total expense ratio of 0.29% per year. If you're looking for a global fund with great diversification, then this is the fund for you. This fund has a dividend yield over the last year of 3.31%. Now that may not sound like that exciting as a dividend yield, but when you compare that to the returns you may get on a bank account in a savings account, it's a very similar return, but with this you also get the return on your capital as well. Now, of course, with this type of fund, you're going to be taking on a little bit more risk than simply putting your money in a bank account. But out of all the funds we're going to discuss today, this has the least volatility. It's the biggest fund, it's that global approach, it's passive, it's hands-off, and for a long-term investment, this could be a great option. It's a well-established fund with an AUM of over 4.5 billion. And although a TER of 0.29% may feel expensive, especially when you compare that to other ETFs, this is actually the cheapest of the 4 that I'm going to show you today. Bear in mind that you will pay a little bit more for dividend ETFs specifically because it has that focus around it. When we look at the performance over the last year, it's done 6.31%. I always like to look at the performance not including the dividends. A lot of platforms you'll see actually include those dividends reinvested. Even if you're having that dividends paid out, they usually have an option where it will include the dividends. So if I do that here, it's actually 9.77%. But in reality, in your fund, you're going to see your value go up by not 9%, but 6% because you've got that dividends being paid out to you. This fund has 2,177 holdings. The weight of the top 10 is around 11%, which is fairly low for this kind of fund. But as you can see in that top 10 holdings, there's some very well-established names that have been around for a long time and have a good history of paying a growing dividend. A good example of a classic dividend company would be one with a strong free cash flow, low debt levels, good dividend growth, and financial stability. They may not be the fastest growing companies, but they're ones that have a good reputation of paying a sustainable dividend. And that's exactly what you're after with this type of fund. But if you still want a global fund with a little bit more concentration, then this next fund is for you. Is the VanEck Morningstar Developed Markets Dividend Leaders UCITS ETF. It has a ticker symbol of TDGB and has a TER of 0.38%. It has a dividend yield of 4.52% over the last year, which is slightly higher than the All World Fund. The key difference with this fund compared to the first fund is this focuses on developed markets, so it doesn't include those emerging markets, and actually only has 100 holdings, so it's a lot higher concentration. But when we compare the performance over the last year, it's well outperformed the first fund, and this fund has performed 14.17% over the last year. That's not including the dividends. And as you can see from the top 10 holdings, there's some similar companies in there, but the concentration is a lot higher. We've gone from 11% all the way to 33% now. So the main differences with this fund is it does have a slightly more expensive TER at 0.38%, but it has outperformed the All World Fund, especially over the last year, predominantly down to having that higher concentration. So if you're happy to take on that little bit more risk, having that higher concentration, then this fund could be for you. It's outperformed the All World Fund over the last year, has a slightly higher dividend yield. You will pay a little bit more for it, but in the long run, that may pay off. The next two funds I have for you are a little bit more specific. If you didn't want to go down the global route, you might want to pick a particular region, then these two are for you. The first is the iShares UK Dividend UCITS ETF with the ticker symbol IUKD. This has a TER of 0.4%. The UK market may not be renowned for the most growth potential, but what it does have is a great reputation of companies paying very sustainable and growing dividends over a long period of time. This fund has a dividend yield of 5.93% over the past year and a one-year performance not including dividends of 10.67%. As you can expect, this fund has an even higher concentration with just 51 holdings and the weighting of those top 10 making up 37% of the fund. But as you can see from some of the names here, they're consumer staples which have a great history of paying not just a good dividend, but also a growing dividend as well. That's really important because you don't just want a company that can pay a one-off good dividend. You want a company with great cash flow that can afford to continually increase that dividend year on year. So for this fund, if your main focus is on getting that great dividend yield that you know is likely to sustain, then this fund could be great for you. Compared to the last fund, the Developed Markets Fund, over the last 5 years, it has been well outperformed. For example, this UK fund over the last 5 years has performed 47.42%. When we compare that to the Developed Markets Fund, which performs 75.87%. But with over 1% extra dividend yield, that could be the factor that sways you more towards this fund, even if you are taking on a little bit more risk by picking the UK market. And the last fund I have for you is the iShares Euro Dividend UCITS ETF with a ticker symbol of IDVY. It has a TER of 0.4%. And similar to the UK fund, we're picking a particular region again with the Euro market here. This fund is even more concentrated with just 31 holdings, but it's seen a great performance, especially over the last year, where without dividends included, it's performed 26.24%. And it's certainly not a slouch when it comes to dividend yield either, with a percentage over the last year of 5.62%. As you can imagine, this fund has a really high concentration, with the top 10 holdings making up 43% of those 31 holdings that the fund holds, and is very heavily weighted towards the financial sector with 48% of the fund. Any of these funds that we've discussed today would be great options for your portfolio, but it really just comes down to how much you want to prioritize having a global approach, have the most passive and hands-off approach, and how much are you focusing on simply just that dividend yield. You're not too concerned with the actual growth of your portfolio because you just want that income every quarter paid into your bank account. I hope you found that useful. Let me know if there's any other dividend ETFs that you've come across that I haven't mentioned today. Let me know down below in the comments. Thanks for watching, guys. I'll catch you in the next one.